Good afternoon, y'all, and welcome back to Mortgage Monday. So let's go over a quick summary here. What we're going to go over today for our evergreen content, we're going to talk to everyone about the automated payment hack that can shave many years, usually 5 or so years off your loan amount and tens of thousands of dollars of interest. Then we're going to go over some updated information for all of my clients and current homeowners, and even some people that might be under contract right now. Give me a call. Even if you're under contract, let's see if we can save you some money depending on where your rates are. All right. And then we're going to talk about some important dates coming up like we always do. Just kind of a little FYI for you. So let's talk about it, y'all. So let's jump right into our mortgage tip of the week. All right. What we're going to be talking about today is the biweekly payment. Everyone knows that basically you can pay a little extra principal. That's the best way to just shave off the time on your loan, okay, and how much interest you pay and all that. All right, but it's the quickest way to get it paid off is paying extra principal, but you have to remember to do that every single week. So the tip is, instead of making your standard once a month payment, I want you to go onto your mortgage servicer's website and see if they have a biweekly payment option for you to sign up for. All right. What that does is basically it makes it so you're paying half of your mortgage every 2 weeks. Okay. The benefit there is just the math works in your favor, right? If you're paying every 2 weeks, that's 26 payments out of the 52-week year, right? And 26 divided by 2 is, of course, 13 payments, not just 12. That extra payment is all extra principal that goes towards paying off your loan a little quicker. It all depends on how the servicer has it set up, but the bottom line is it helps you pay it a little quicker, all right? So simply letting this system run in the background, shave usually around 5, maybe a little bit more years off of your traditional mortgage, because it's set up to pay every 2 weeks, so it's paid more quicker. You're paying off more interest principal quicker. The quicker you pay off the principal, the less interest you pay over the long term. All right, and obviously you're just paying off the principal. And the quicker you pay off the principal, the less interest you pay, the more principal your next payment's paying. So it's all the mortgage math, but it works out great if you do that. All right. So also a good benefit is when you first set that up, very frequently the mortgage servicer will let you pick when those first dates are, where when you can start doing that. And so you can line it up with your payroll cycle if that's helpful. So that's one big benefit there as well. One big catch is that there are some servicers that don't let you do the biweekly payments. Now, there are extra options to kind of do the same thing. The real easy one is, if you want to get ahead, just make that extra principal payment, right? Divide your mortgage payment by 12. When you make your mortgage payment, add that extra amount there, and you're basically accomplishing the same goal. You might even do it a little bit quicker because you're paying more principal off earlier every month. Okay, that literally does make a sense and a difference. Mortgage interest is accrued daily, so that would make a huge difference. All right, there's the other option of just making biweekly payments. You would just be making your normal payments. There wouldn't be any benefit to paying off the principal early, but if you just make sure your payments are paid on time, that's the thing. You got to get a little ahead. But if you just start making biweekly payments, after a little while, you will be ahead, and you are literally just paying that extra payment in advance and getting done quicker. And again, because you're paying off principal earlier, every payment has a little bit less interest and a little bit more principal being paid. So that is helpful. Just make sure you're ahead and you don't end up behind in that first couple weeks of doing that. Okay, first couple months really. All right, so that's kind of it. That's that major tip of the week. Let's talk about our mortgage rates and what we have going on. So right now, you're looking at the Optimal Blue mortgage indexes that we always look at. The most important thing, again, is to look at this is that these are actual consumer locked rates. No marketing hooks here. Our current benchmarks are actually we've got your 30-year conformity fixed right around 6.375, 6.5 range. Jumbos are slightly higher than that on average, but more or less jumbos right now are staying around that 30-year standard fixed rate. You've got your FHA slightly lower, 6.25, 6.375 range. VAs down around 6 1/8, 6.125. Again, this fluctuates every day, but just around that number where they're hovering. And your 15-year are coming in really low. If you can do the 15-year, you're at 5.75 about. So that's a great rate to lock in right now if you can do the higher payments. Okay, so what does that all mean as far as rates go, and everything? All right, so here's what that means. Refinance trigger. If you own a home already, or you recently locked in a rate and you're in the middle of, that's what I was talking about. If you're in the middle of buying, you haven't bought yet, and you've locked something in. If you're over 6.75, you need to give me a call. Let's see if we can get something a little lower. But if you're over 6.75 and you already own a home, same thing. It's worth calling me to see what we can do to lower your rate and payment. Okay. It may or may not be worth it. We got to do some math. Make sure. Give me a call anytime. We're not going to do an application or anything like that. Let's see if we can what the math looks like with where you're at now and refinancing to a rate that's lower. Okay? There's also the cash out options. All right, if you need some cash out to consolidate some high interest debt, fund home improvements, or meet any other financial needs you might have, but you already have a decent rate. Okay? Two things. One, you can do a cash out still, even if your rate's around 5.75 or higher. If it's around that number or higher, it still might make sense, right? Even though we might have a higher rate, if we're paying off all that debt, it might still make sense to go ahead and do a cash out refinance on the whole mortgage and lower your overall payments. And in the end, get things paid off quicker, hopefully. All right. Especially if you take some of that savings and put it back into the payments. That'd be a great idea. Okay. As opposed to just running up credit cards again or something, which I've seen happen. Let's not do that. Okay? Option two, though, is if you don't want to refinance your first, you can always do a home equity line of credit here in Texas. Okay. Sorry, I didn't turn off my phone. There's someone at my door. Anyways, you can always do a home equity line of credit or a second lien that's actually just a loan, depending on what state you're in. So in Texas, you can only do HELOCs. Okay? So that's something we could do. You could leave the first alone if you've got a great rate. We don't touch that. If you have the equity, we do a home equity line of credit, and we refinance, take some of that equity out, and you can use that to pay off some debts. And so we need to look at that, make sure that makes sense financially, because those rates tend to be a little higher than the actual refinance for a cash out. But we can look at that. Give me a call. Again, no obligation to do an application or anything. We can just run some numbers. I'll need like a mortgage statement or something, and we'll take a look at it, see where rates look at, rates look at now versus what you got and what we could do. All right. All right, so that's pretty much it about the rates. Let's talk a little bit about some dates that are coming up. All right. On the national level, there's not many big dates coming up. There's just a little FYI for y'all. The next major holiday is in September, so not much yet. But the big thing that everyone in the country is going to be starting with is school coming back again. I mentioned that a couple weeks ago. For all my locals, Leander starts on August 12th. Austin starts on August 18th. Round Rock starts on August 19th. And on the national level, just FYI, if you're out there, pretty much all schools start before the 18th of August. Like I think the stat I read was like 52% of them start before August 18th. So keep an eye out. It's coming up quickly. All right, y'all. Let me just wrap it up again here real quick here. Talk about what we went over real quick. Call me immediately if your current rate's over 6.75. End of conversation. You need to give me a call. Let's see if we can get you a lower rate. If you're over 5.75 or higher and you need to pull some equity, give me a call. Again, no application needed. We can run some assumed numbers and just make sure it all makes sense. All right. What I like to call your self-service equity. If your loan servicer doesn't allow the biweekly payments, if they do that. But if they don't, call me. I can help you talk through what you can do to make sure you're paying that off a little quicker systematically. All right. And last but not least, like we just said, don't forget to write down those dates and get ready for back to school. I'm sure your school's emailing you like crazy already. So with that said, y'all, that's all I've got. I'll see you next week. Keep the faith. That's all I've got. Later.